Hi guys, I hope it is audible right now and you're able to see the screens. Uh, is everyone able to hear the audio properly this time? Okay, that's perfect. So Vandana, can you try speaking something? We'll just confirm whether it's clear or not.
Sure. Hello, everybody. Can you hear us?
Yeah, is this audio also audible, guys? Okay, I think it is. Uh, yeah, first of all, I would like to apologize for the previous mess up which happened regarding the technical issue. So we have got everything sorted out now. So sorry for that. And this session will be discussing more about the trading psychology, and we'll try to understand how a trader's mind works while we are actually entering any trade or taking any trading decision, right? So to discuss this, we have Vandana with us. So Vandana is the founder of Psychoflakes. So she does most of her work in mental health, educating about mental health mainly. So you can also go check out her website as well as Instagram page. The link is in the description below. So Vandana is a clinical psychologist. She has done masters in clinical psychologist, and she also does counseling for a lot of corporate firms as well as clients, right? And after that, she is also into trading as well as investing, and she has a fair knowledge about that. So that's the reason we have her here to understand about trading psychology much better. So, quickly starting off with, we'll have a quick intro of what exactly is trading psychology and why is it important.
Okay. So, hello, everybody. I hope this time I'm audible to you all. As last time, there was a lot of glitch that was happening. So, trading psychology, the most important thing to understand over here is that when you're trading with your numbers, you're trading with money, and also you're dealing with your emotions, you're dealing with your biases, your past experiences. So, for example, suppose you have made continuous profit, all right, and say for a week you have made continuous profit, and then on the eighth day you are overconfident, or you have the pride that yes, today also I'm going to make profit and it is my day in the market, right? But as we all know, that market is very unpredictable, and we can end up losing everything that we made in that 1 week time period. So trading psychology is about having the right mindset, understanding our own emotions, our own thought processes, what are the biases that we have, so that we can be a better trader and make better returns and take informed decision. So that is the crux about what trading psychology is.
So, right, Vandana. So, here, since you have already mentioned about biases, so let's say I take a simple concept of equity trading. So, we'll get into options, futures later on. So, if I just take into equity trading, so what are the kind of biases which we usually get to see in equity trading?
Okay. So the first bias that we will discuss today is by asking you a question. All right. So do you have any favorite stocks, Sakit?
I do like couple of stocks. So I personally like Nestle. I like Kotak Bank. So maybe audience can also give out their personal stocks.
Yes. So we do have personal stocks, and do you tend to buy these stocks in more quantity, Sakit?
For investing, yes. While I am trading, so there are certain stocks. Like for example, to be honest, in trading, I have made some good profits with Bajaj Finance. So whenever I have purchased Bajaj Finance, so I have this in mind that when I purchase Bajaj Finance, it might actually end up going up.
Exactly. So, many of us, I think even in the comment section, also they have, given out their favorite stocks like Asian Paints, HDFC Bank, Asian, and okay, there are a lot of Asian Paints, Yes Bank, and all of those things. So, we like these stocks because maybe at one point of time when we are trading, these very stocks would have given us a lot of profits. Okay, so we
Right.
have bias that, these are my profit stocks. So no matter what happens, it is going to give me profit. So same way, you might have certain stocks which, are loss stocks for you. Say, for example, you would have bought Yes Bank or, Kotak Bank, say when it is doing really bad. Okay, you would have just heard a whisper in the market that, this stocks are going to go up, and you end up buying it, and then you realize it was a bad choice, and this is a bad stock, and you don't end up buying it, even though it would be performing better in the market. So I have this one
Right.
example, right? So we have one professor. So I remember this was in our first year of college, and he told us that, Canara Bank was doing good at that time, so he purchased a lot of stocks. And then later on, he was like, "Oh my God, this stock is so bad. I want to, just get rid of it. I don't know what made me buy it at that time." So because we have this bias, right? Once it gives us profit, we tend to keep buying it again and again.
Right.
Right? That
Right.
is called the representative bias in psychology.
Okay.
And
Okay.
something that we like, we always tend to think that it is going to get us profit no matter what. And we always
Right.
stick to it irrespective of what is happening in the market.
Right. So there is one more thing since you mentioned about this. So there is one more thing which comes to my mind when you're talking about this. So since for example, I would have entered some position, assuming that I have entered some positions. So what actually tends to happen is, let's say I'm long on Kotak Bank. And sometimes I tend to look for positive news about Kotak Bank everywhere. I open news app. I try to see what is positive for Kotak Bank today. Will Kotak Bank go up? Will banking sector do well? So why does this tend to happen? So is there any reason behind psychology that we go for searching for good news about the stocks we own?
Yes, actually, there is something called as confirmation bias. Okay, so for
Okay.
example, like how you mentioned, so Kotak Mahindra Bank, you have done your research and everything the previous day night, and you feel that, the whatever returns that you're going to get is going to be very good this time, and the entire quarter Kotak Bank has performed really well. So you are like, okay, I'm going to buy like 100 or 200 lots of Kotak Bank, and then when the result comes, it is not what you expected. Okay,
Right.
so you thought it would be very great, but it is something of mediocre, that result. So what you
Okay.
do is you go and search for those news sources or people who constantly talk about how great Kotak Mahindra Bank is, but only because of certain big players, or because that something is wrong with the market. That is why the result was not that great. Big players have definitely done something in the market. We tend to
Right.
blame or find reasons to defend whatever we are thinking. So we go to
Right.
those channels or those people's opinion wherein they say that Kotak Mahindra Bank is very good. It is other factors that led to this wrong decision. So yes, that is called as confirmation bias. And we tend to look at things that is more favorable to us, and we don't look at the flip side or the downside of it.
Right. So I think even audience might have had this confirmation bias. I have personally had this a lot. So what tends to happen is before result day, you end up buying a stock, and let's say the results are bad, but like for example, if you take Kotak Bank only, let's say the results are below estimate, you still try to convince yourself, okay, the NPS has reduced, that has happened, this has happened, so there might be a chance that we will improve. At the Kotak stock might actually end up going up. So it has personally happened with me for many stocks, and I am sure that few of them in the comment section, in the live audience section, would have also faced the same. And yeah, so like people can also know let us know their experience in the comment section. So what do you actually think about it? So next, coming to there's one more really interesting thing which I wanted to point out, since we are discussing about trading psychology. So what actually happens is so I would have done lot of research. So this mainly happens when you're doing lot of technical analysis. So what you do is, previous night you do lot of research. You'll be like, okay, at this point I'm going to buy, this point I'm going to sell, right? Next day you come into the market, but you end up doing completely different. So you would have planned properly, but you don't end up executing that plan. So why exactly do you think we end up doing that? So is there any reason why we end up doing that?
Definitely. So just again, I'll be asking you certain questions. You let me know whether that happens to you or not.
Right.
Right? So you would have planned the previous day night that you're going to buy Britannia stocks, or you're going to enter the market at say 10:30 in the morning. All right, and at one particular amount you're going to enter, and you're going to keep some amount as your stop loss, and that's what you have planned based upon your research. But as soon as 9:15 happens, you have the opening bell and you see a lot of activity that is happening in the market. Okay, and a lot of
Right.
players are buying or selling, or they are a lot of discussion is going on, and even news channels also keep saying us to buy or sell at this time, right? So all
Right.
of these factors influences you, and instead of sticking to your plan, you will end up getting confused, and you'll be like, okay, I might gain like 1,000 rupees if I enter right now, so let me just enter right now. So sometimes this can work in your favor. This can help you to gain that 1,000 rupees, but sometimes it can end up making you lose the entire amount, and you
Right.
keep thinking that, oh my god, I'm such a bad trader, I had my entire plan ready, but still I didn't get the result that I'm expecting. So the thing over here would be is to stick to whatever trading plan that you have made, instead of getting confused, instead of getting influenced by other factors. Stick to whatever plan that you have and execute it. At that time,
Right.
think of yourself as a trader. What would the trader do over here?
Right.
Not
Right.
what the other person around you is doing.
So it's more like it's more like we acting like robots where yeah, so it's like you have, if a robot is told to enter at 10 o'clock, it won't be entering at 8 o'clock, even if we are even if we want, so the robot will do what it is told. So
Yes.
yeah,
It's like
I
even a computer program as well. So when you give the program to it, it will only execute what is instructed for it to do, right?
right.
Otherwise, it will just show an error, or it won't
Right.
execute the program. So yes, you're very right in that manner.
So I guess many people in the audience section would have also faced this issue. So I have personally done that. So that's the reason whatever my personal experiences are, I am trying to get that clarified, because I would have planned something. So many times I will plan to enter not before 1 o'clock, but sometimes, and that was happening before when the markets were very volatile. I used to think I'll not enter before 1 o'clock, and then I come and see the markets, and I feel like, okay, now might be a good chance to enter, and I just enter at 10 o'clock. So that used to happen a lot. So yeah, so your advice to that would be to more or less become like start thinking like robots when we are trading.
Exactly.
Right.
Yes.
So now, uh, one very important thing is in trading, right? When you actually look at trading, many people actually want to grow their money really fast, but they end up losing quite a lot. But on the other hand, you have institutions who actually end up making a lot of money. So they end up making in crores. So if I want to understand what is the difference between the mindset of an institution and retail trader, so what differentiates between these two people?
Okay. So a big institution player, all right? So they have a lot of money. So for example, they have 1,000 crores as their corpus. I know for a big institution, this is a small amount. Just for example sake, I'm saying. So a big institution has 1,000 crores. So their main focus over here would be what? Would it be to double the money, or would it be to just get maybe 10% return so that they can keep the capital? What do you think,
Yes.
Zakir?
So I would think it's obviously to save the money they have. So because if they have 5,000, 10,000 crores, even if they make 10%, they'll be making around 1,000 crores, 500 crores.
Yes.
So
Their focus over here would be to save the capital and not erode it completely, right? Whereas for a small investor, say you have 10,000 rupees, and this 10,000 rupees is your hard earned money, or all of your savings, like friends pooling together to double their money, or just get something from the market. As everybody says that you invest, you get a lot of good returns, right? So
right,
small
right,
investors generally tend to put their money in the market, only looking at the upside of the market. That is, they're going to
true
get
that.
profit. or they're going to
Okay.
double their money. 10,000 will become 20,000 rupees. So that is their focus. They don't look at the flip side that they can lose this entire 10,000 corpus as well. And then they might
True.
not be able to trade in the market till they, make some money or save some money, right? So that is what happens. That is the different focus between big players and small players. Big players are looking for small gains because they have enough corpus with them, and even a 10% or 5% gain will get them the return that they're looking for. Whereas for
Agree.
small players, the amount that they invest is small. So 10% for 10,000 would be how much? 1,000,
Yeah.
right? So that
Right.
would be a very small amount for them.
Right.
Correct.
So
So they're
what?
looking at the upside, not at the downside. Yeah.
Right. So what I get to know, understand from this is basically that think if so to think like big institutions, you think on the downside rather than thinking, okay, I want to double my money tomorrow and I want to grow my money by 75%, rather than look at what is the downside. So there's one more thing which I like to add on to this. So what Vandana is telling here also makes sense mathematically. So the thing is, if you look at this, if you lose 10% to come back to normalcy, you will need 11%. If you lose 20%, you will need 25%. So same way on the downside, if I lose 50%, I will need 100% to get back to normalcy. And similarly, if I lose 90%, I'll need 900%. So the more I lose, it becomes harder for me to get back. And I believe, yeah, and I believe many of the people in the audience also agree with us on this. And I have personally done what you have told or what you have mentioned. So what I ended up doing was that when I had 10,000 or 20,000 rupees, my idea was to make this grow quickly. I never saw that what if I lose the 20,000 rupees. So what you actually are telling, I can directly actually relate it to myself because I have done that once upon a time. So now, moving on, I wanted to ask one more really interesting question. So all these are from my personal experience, which I want to ask you, right? So let's say I start with a capital of 1 lakh, okay, and so the thing is, I will be like, okay, if my trade goes right, I'll end up making 1,50,000. So what happens is suddenly I end up losing 20,000. My M2M will be showing negative 20,000. So then suddenly I'll be like, okay, I don't know what to do. I have already lost 20,000. So I don't want to cut my position because I'm not ready to accept 20,000 loss. It is too much for me. So what I end up doing is I'll be like, okay, let me hold on to this position for some time. Let it recover. I'll then give it. So when it recovers, again, I don't give it. Again, I'll be like, okay, it has already come from 20,000 to 10,000, which means it can also go from 10,000 to zero. So I don't end up giving it. And finally, I end up losing most of it, and I maybe book my loss at 40,000 or 50,000. So this is what I personally did when I started trading. And what is the reason behind this? Why can't we accept our loss and cut it off?
Okay. So this is also another bias. It's called as the gambling fallacy. So I'll
Okay,
explain it to you all. So the thing is, whenever we are choosing any particular stock, right, we expect it to go up,
right,
that it keep going up, and we don't accept that, or we don't think that okay, this can go down as well, or we can end up making losses as well, right? So
right,
whenever
right,
you're facing situations like this, that you have invested a certain amount of money, and the market is not in your favor as it is very unpredictable, and Saket, my voice is echoing.
Is it okay?
Yeah.
Is it fine now?
Yes, now it is fine.
Right,
Okay. So like I was saying that when you're making losses, right? And you know that you have invested 1 lakh, and in your market MTM it shows that it is 20,000 loss. So at that time, instead of holding on to the position and expecting that your stock is going to go up, you can exit that particular position, so that you save your capital, you do not lose out on your entire capital. Another
Right.
example I would say, not only with loss, even with profit as well. So suppose you've invested 1 lakh rupees and you have set a target that you're going to get 10%, and once you get 10%, you will exit from that particular position. And then you see that the market is going up and everything is in your favor, so you feel little greedy, that let us hold on to this stock for some more time and see, okay, I'll make more money if I hold on. So that is the mistake that a lot of traders do. So over here, what you can do is, instead of holding the entire money, okay, you can withdraw some amount of your profits. Suppose you have made 10,000 profits, you can withdraw 5,000 profit, and the other 5,000 you can keep in the market. Wait for like few more time, like 1 hour or 2 hours. If you still feel that the stock is going up and you're going to get more profits, you can withdraw again 50% from that
Right.
and then
Right.
hold on. And so in this way, you're not losing out on your returns, and at the same time you don't have this fear of missing out, that you're losing out on the profits
Right.
that you should rightly get. So same with
Right.
loss. So you can cut down your loss by getting out of it instead of expecting the market to go up.
Right. So I think the thing is, before I add on to this, so there's a very interesting thing. So why, if the loss was 1,000, 2,000 rupees, I didn't feel like coming out. But if the loss went to 20,000, that's when I started to get scared. So why didn't I actually think of cutting it at 2,000 rupees? Why did I actually have to let it? So why did the 20,000 affect me so much?
So the 20,000 affected you a lot because, see, if I take 10 rupees from you, you want, like, you made a profit or profit of say 10,000 rupees, and I ask you 10 rupees, you will give it to me, right? You will
Right.
not be like, no, I won't give it to you, right?
Right.
But the same thing, if I ask you 9,000 rupees, would you give it to me?
I would be hesitant. I like, yeah.
Right.
Okay.
So the
So,
same thing you apply it over here.
okay. So, what I can make sense of this is the moment I lose more than what I'm ready to accept as my loss, I am not ready to give out so much. I am emotionally involved in the trade. So, if I had maybe 2,000 loss or 3,000 loss, I don't put so much of emotion into the trade. I don't feel the pain of the loss. Maybe when I actually end up losing 20,000 or 30,000, I start to get the pain of the loss. And that is what doesn't let me allow me to book the loss, if I'm not
Yes.
wrong. Is
You would be
right.
emotionally invested in that particular decision. So that
Right.
would, cloud your judgment whether to, get out of the trade or to remain in the trade.
Right. And actually, what you have mentioned falls perfectly in line with most of what the traders recommend in many books. So, for example, if you see any books regarding trading or mastering trading, everybody talks about one thing. So, they talk about cutting down your losses small. So, they might be talking with perspective of numbers, but it's amazing how even psychology falls in the same place and tells you that you cut your losses small because it won't let you get involved emotionally. And similarly, even on the higher side, so they also mention about booking profits like gradually or time by time. So what you, again, it makes perfect sense with numbers also, because if you actually books part of your profits at a very high level, so you let the remaining quantity ride you further high, or if it comes down, you're still not going to lose everything. So it's amazing how different fields actually line up in a single thought. So that,
Yeah,
right. So
absolutely.
yeah, next, moving on to the next question. So the thing is, what I usually get to see is, once I actually start losing more money, since we have already spoken about a loss in the last question, once I start losing a lot of money, I start to take irrational decisions. I want to do revenge. If I lose 1,000 rupees, I won't go and tell I want to do a revenge trade. I want to get 10,000 rupees right away. But if I lose 20,000 or 30,000 rupees, I may start to make irrational decision. So I want to somehow try to recover this 20,000 rupees right away. Do revenge trade. Do that. Do this. So why does my mind have to behave in that particular way? Is there any psychology reason why my mind behaves in that particular way so irrationally?
More than psychology, this is to do with your neurology inside your body, what happens. So when you are in too much of like losses, so you tend to question your decisions, or you tend to feel that today also I'm going to make a big loss, or you get that pressure that I'm supposed to make some profit. So imagine that you have your clients to be answerable to, and if you show a consistent red, so they lose confidence in you, so there is a lot of pressure that is being developed in you. So that time there is a hormone called as cortisol that gets released. Okay,
Okay.
so when this cortisol is at its highest level, or is it in peak, at that time what happens is that we are very anxious. Our judgments get clouded, like how you mentioned, you think about having a revenge trading, or you feel like, okay, I have to go and somehow recover the amount. So at that time what you can do is you can take a break,
Okay.
take a look and see what is happening in the market. What were the things that went wrong? What are the
Right.
things that you did or strategies that you did that didn't work out? Take a break, pause, analyze the market, understand the market, and then enter it.
Right.
Maybe you will
So
be seeing a, like, sometimes you'll think that you need to change the entire strategy, but only tweaking of that strategy can help you make your gains.
right. So, like how you rightly mentioned, we do also face this many times
Mm-hmm.
that 2, 3 days when you make consecutive losses, it puts you off. So you think next day you're really scared to enter. So you start to think, okay, what if I make one more loss today? I'm going to lose so much. So so the thing is, what you're trying to convey here is that when we get into such mindset, it is okay to take a break and then jump in. So there is absolutely no need to keep on trading every day with our trades, right?
Yeah. Sometimes
Yeah.
when we accept profits, similarly we have to accept our losses as well. We can't keep
Correct.
fighting those things, right? So when
Correct.
you accept it, it becomes much better for you to trade in a much better or superior manner than before. Otherwise
Right.
you'll just keep fighting it, you'll just be trying to
True.
recover that loss.
True, true that. So, what I understand is most of the decision goes wrong when I start to get emotionally involved in the trade. So, when I start to feel very happy that I'm getting so much profit, or when I start to feel really scared that I'm losing so much money, right? So, the thing is, I want to know one more thing from you. So, how do I take rational decisions and get less involved emotionally in the trade? So, what are the factors that I have to look forward to make sure that I'm not so much involved emotionally in the trade?
Okay, so first thing is that so Sakit, what is your routine? How do you take the trade?
So I
Mindset.
look at the markets. I enter certain quantity of position. When it starts to go wrong, I'm like, okay, how do I adjust this? What trades do I take to counter this? So I start thinking in a angle that, okay, what might happen to the market, and what might actually, so what my decisions will actually end up affecting the market.
Okay. So do you always look at the positive side of the market, or do you also look at the negative side of the market?
So the thing is, when I am in huge loss, I always tend to look at the positive side. I'm like, okay, I've already lost so much. Okay, I need to do something to get back. And when I am actually with no profit, also, I tend to look at the positive side, thinking that, okay, I can make so much money. But sometimes when we make a lot of profit, you tend to look at the negative side, and you will be like, okay, I have already made so much. What if I lose so much? Or what if I lose whatever I have made?
Okay. So based on this, one thing we can be very certain or clear about is that you have a trade plan with you, right?
Right,
So every day before you enter the market, you have decided that this is my risk appetite. Say 2% of my entire capital is what I'm willing to lose. No matter what happens, it's okay, right? You have your risk
right,
appetite set, you have your strategies set, you know that this is what you're supposed to do, this is the time that you're supposed to enter, so you stick to that trade plan, right? Or do you
right.
keep wavering?
We so most of the times we do stick to our trade plans. So sometimes we do deviate, but we pay lessons for that. So yeah, most of the times we do end up sticking to it.
Yes. So the most important thing is, you stick to the trade plan that you have made. Don't enter the market aimlessly without having a plan just because others are making money, or just because somebody says that, buy Kotak Bank and sell Nestle, it will be all good for you. So without knowing the logic, or without knowing the past history, like history in trading is very important. So always, see the past performances of your stock, see whether this is something that has been working out well on a long term or not. So stick to the trading plan that you have made. That would be the first thing. The second thing, like I mentioned, sometimes you might not understand what is happening in the market, right? It
Right.
will be very unpredictable and you will be
Right.
confused, or sometimes you might get influenced, just like, let me just go with the flow. So that
Right.
can cost you a lot sometimes, right? So when you're not understanding what is happening, you can always close your positions and observe what is happening, learn from it, and then implement it next time when you see it.
Right. So
During the
actually,
Yes, sorry. Yeah,
yeah.
continue.
Sorry. Go ahead.
No, no, continue.
Yeah, actually, what you told right now, I can relate it quite a lot in our trading as well. So usually, we also keep telling the viewers whenever we do a video that whenever we are uncomfortable with holding a position, we just come out of it. Sometimes you really don't feel that good holding the position because you don't know what is happening. So many things are happening around. You have messed up your position with lot of calls, puts, everything. So sometimes it's good to come out of it, and it's amazing how even like even in your field, when you want to talk about right mindset to trade, so this also comes in one of the list, that to come out of the trade if you're not comfortable holding.
Yes, and you also maintain a chart, right, to measure your performance. So every
Right.
Thursday or every Friday, the day that you trade the most, you maintain your record, that whether you made profit on this Thursday or whether you made loss on this Thursday, what was the good trade, what time did you enter, what time did you exit. You keep a record of all of those things as well, right? So that you can also see your performance over the span of maybe say 1 or 2 years. You will see that you have changed your timing to enter the market or to quit the market at some point of time. So you can see your own performance as well, right?
Right. So the thing is, what Vandana is telling right now is actually falls in line with what most of us do. So the thing is, like especially at optionables. So whatever strategy we use, like how you told, you need to know the past performance or the history. It is always good to back test it, so you get a proper data as to whether the strategy has worked or not. So that also falls in line with what you're saying and what you told now. So we also maintain a regular Excel journal where we record all our trades. So this much profit we made, this much loss we made. And how you rightly mentioned, it actually helps us analyze the trade later and know, okay, is this actually working out for us or not? So are we doing the right thing or not? So we actually do it personally, and this has actually helped us quite a lot, to be honest. And next, coming to, since you have already mentioned about all of this, and there's very important thing which I would like to ask, and this is my personal favorite topic. So what are your comments on position sizing? So how do you think, if I go 10 quantity or if I go 10,000 quantity? So if I position myself or position size myself differently, how does that have an effect on my emotion?
Can you elaborate a little bit on this?
For example, let's say I end up buying 10 shares of HDFC Bank. Let's say I have a capital of 1 crore and I end up buying 10 shares of HDFC Bank. And let's say I have capital of 1 crore and I end up buying 10,000 shares of HDFC Bank. So how does this position sizing has an effect on my emotion? So if I go lot of quantity, so how does that affect my emotion?
So your emotions, it gets affected because you tend to feel that it is going to make a lot of profit, or you're going to feel that this is a feel good factor for me, or this is my favorite stock, so it's always going to end up making a lot of profit, right? So you tend to be emotionally involved to it, and you tend to relate to it too personally. So when it doesn't do well, so it is very difficult for you to get out of that huge lot size that you have taken up. So it would be better that you do not have a lot of personal attachment to your stocks. So don't give it a lot of emotional meaning, so that you can easily move ahead and move on from this.
Right. So it's more or less about having lesser quantity so that you will be involved less emotionally, so that it's easier for you to come out of it. So if I'm
Yes.
not wrong.
Yes. Less
Okay. Now,
emotionally involved. Yeah.
yeah. Now, coming to since we are almost coming to the end of the session, we will also take some live Q&A from people. Before that, I want to ask last couple of questions, and that is one advice if you want to give to traders, what would it be? So,
Okay.
like, how
So
do they
like
prepare themselves
Yes. So, like
mentally?
I said, one thing is that, maintain or stick to your trading plan. The other thing would be is that, whenever you're trading, go with a clear mindset. Do not be thinking a lot about what you did in the past or what are you going to be doing in the future. Say, for example, you've had consistent loss. Don't keep thinking about the loss, or don't be questioning your own decisions, right?
Right.
Every day in the market is a new day. It's a
Right.
new journey for you. It is not something that gets carry forward. Maybe your positions might get carry forward, but not every decision that you take or is going to get reflected in your market, right? So
Right.
it's going to be a new thing. So be in the present, focus on what is happening in the market right now, and take the trade. Okay, so it's better to always meditate a bit, or if at all you like to exercise in the morning, then you can exercise in the morning, so that you're more focused and you have a better attention span when you're trading in the market. And be not too emotionally involved in the market. You can detach yourself from the same. Sometimes it becomes a little difficult, but then always think of it like something that is there. You don't always have to invest all of your energy into it. And another very interesting thing that people say is that when you're looking at the screen, you only see numbers. Sometimes you tend to forget that these are actual money. So there are
Right.
few
Right.
traders who keep money in front of them, just to remind that they're dealing with actual money, and they need to be careful about the decisions that they take, because they
Right.
might get too
Right.
overexcited to see the numbers moving upward, or in so many thousands, that sometimes we forget that it's actual money and take
Right.
certain routes
Right. Right.
which
Right.
can impact our trade. So yes, so we can keep money as to remind yourself of it.
That's a really great idea. So the thing is, if I'm losing 500 rupees, I just start pushing away 500 notes, and I can actually visualize, okay, I'm actually losing so much money. So maybe we should actually give it a try and see how that works. And
Yes.
yeah, now moving on, there's one more really important thing which I would like to ask you. Before which I can also, so I would also like to ask audience to start asking their questions, because since we are coming to the end of the Q&A, so you can start asking your questions in the live chat section, and we'll be addressing all of that together. And before which, I would also like to brief upon whatever you have said for people who are joining in. So the thing is, what we get to read in most of the books, or what we get to see in most of the videos, and what psychology says. So surprisingly, everything aligns together. So one, with respect to your risk management; two, with respect to getting less emotionally involved; and three, having right position sizing; and four, maintaining a proper journal; and five is maintaining good system, back tested system, which will give you confidence. So, and you have also given some great advice to traders, right? And so one more thing, last thing, which is my personal favorite, which I want to ask you is, if I actually, let's say, if I actually end up buying a lot of stocks and I am in huge loss, okay. So
Mm-hmm.
now we have just discussed about what to do not to get into such a huge loss, that is to maintain less position sizing, have proper risk management. Now I'm in a huge loss. So what should I tell to convince myself that it's okay to have this loss?
Acceptance, that's what you're talking about,
Yeah,
right?
it's
So
so
when
hard to accept it.
Yeah, that happens. Sometimes it becomes very hard for you to accept that you have made such a big loss, and how do I face my clients, or how do I face myself for this? So sometimes, when if you see the loss, you learn what are the things that you have done wrong, or you learn what are the mistakes that you have done. So sometimes, you just gulp it down and go ahead in the market with a fresh strategy, and see how you can rectify it, and move ahead with it.
Right. So now we'll start taking in some audience queries. So before which, guys, if you haven't checked out Psychoflakes, so Vandana is the founder of Psychoflakes, which is a mental health page. So you can definitely go and check that out. I have put the links in the description. You can also follow her on Instagram. So don't forget to check that out. So here we have Basappa, who has asked an interesting question. So, how and why does TV news affect our psychology?
So yeah, that's what we spoke about, the bias over there, that sometimes the news channels are exhausting, and they give us a lot of information, and we don't even check those information because we think that okay, this is completely accurate, and we go ahead with it without having a plan of our own. So it's better that you have your plan of your own. You can just see the news channels for what other person is doing, but always do your research first and then take a decision rather than blindly following somebody else.
Okay, so again, it all comes to your personal this thing, because I think if I'm not wrong, there'll be different types of traders also, right? So it's not just all traders are same. So not everybody wants to take risk. Not everybody wants to go with less risk. So maybe someone or something that is told on TV, let's say something which is very aggressive, might suit a particular trader but might not suit one more trader, right? Again, as she rightly mentioned, it is always good to do our own research because we know what suits us the best. And now we have okay, one more big question what we have is from Prabhakar. So he is asking us, what is the correct psychology for option trading? So is there different psychology for option trading and equity trading, or how do you want to?
No, I think it's all about having a calm mindset. For example, as you would have seen, Saket is somebody who's very calm, so he uses this to his advantage when he's trading, right? So he can take decisions because he's more calm, and he doesn't get too agitated by the market, or doesn't get too influenced by the market, as he has experience of over a decade, right? So similarly, there are some people who can be very impulsive in nature, or might are somebody who just wants to go into the market and buy things, like how you do shopping. So at that time, what I would say is that keep check of your emotions, know what are the things that are your drawbacks, or the things that can cost you a lot of loss, right? So keep check of your emotions, get to know what kind of personality you are, and work on those things first, and then you enter the market, so that you don't get easily influenced, or your emotion shouldn't take the better side of you. So there is no such different psychology for different traders. It is the same thing. Only thing is, know yourself better, know what are your strengths, know what are your weaknesses, and like how we were discussing, always look at the flip side, the worst side of the market as well, so that you're prepared for it in a better manner, so that if that situation presents itself, you can deal with it in a better manner, as you've already envisioned it.
Right. So that's a great advice actually. So we have a couple of interesting questions coming in as well. So and guys, try to restrict your questions to psychology based because we'll be talking about trading psychology. So anything regarding trading strategies, we'll have one more live session for that. So here, what we really so the thing is here we have Rakesh sir who is asking us a question: how do we build up conviction during trading? So if, for example, if I do a particular research, right? How do I build up conviction? Okay, this I want to invest so much in the trade. So how do I build up that conviction?
How much do you want to invest into the market, right?
Not exactly how much I want to invest, but more on the lines of I have done my research, but how do I get confidence that should I actually follow, what if I go wrong? I might end up losing. So what can I do? So how do I get conviction to enter my own?
So why do you always think that something wrong is going to happen? Why can't you think that something good can happen with this decision of yours as well?
Right.
Why always thinking that your decisions are always going to be wrong? You can always see that okay, decisions might be right, right? And also another thing is that when you're trading, always look at the big players as well and see what they are doing, what is working for them. For example, what is working for Rakesh Junjunwala? Why is it that he is purchasing Titan?
Right. Right.
So look at people who are successful as well and learn from them. What decisions are they taking?
Right.
And try to mirror it by understanding the logic behind it, not just blindly copying somebody, but understand what is it that is making them successful or making them take that particular trade. Do your research at that time and then enter the market.
Yeah, because even Jinjunwala should be having lot of conviction, because it is not easy to hold more than 50% of your portfolio in one single
Yeah.
share. So for that, you really need lot of conviction. So now we have one more question from Sumit Singh. So we'll have this session on for another 10 more minutes. So we'll try to answer as many as possible. So we have one more question from Sumit Singh, who is asking, how do I stick to my own rules or strategies which I make? Because every day, I think we have already touched upon this, that I come with a particular plan to the market in the morning. And the very next day, when I actually sit in front of the market, I end up doing something completely different.
Yes. So we spoke about that. Is
Yeah.
that
So,
stick to the plan that you have made. Do not get sidelined by what is happening around you. You have done your research. You have done your back testing. You have done everything that is needed for that particular trade. So just execute it and see.
right. So now, one another. So we have one more question also coming from Harshal as well as Mukesh sir. So one thing which I would like to tell what people actually do in trading is, let's say I buy something at 100 and it drops to 50. So they'll be like, okay, let me buy more at 50. Then it comes to 25. Let me buy some more at 25. So finally, if it goes back, I can anyways give it at profit. So why do people? So this is averaging, and why do people actually end up averaging? Why do they actually, whenever it comes down, they add more? Again, when it comes down, they add more. So what is the? So mathematically, the idea is when it comes up, you are going to give it at a profit. But every time you do that, you are putting more money into risk. So what is actually making you do this?
So yes, we discussed this as well, right? So wherein
Right.
if at all you have kept a limit or like 10% is the profit that I'm going to make. So stick to that profit and suppose you have put in 500 quantity. All right. So get out of 50% of the same. Okay. And then you see the profit going up and then slowly get out of it like 50%, 50%, 50%, so that you get the profit and at the same time you don't lose out on money.
Right, right. So it's again having a proper risk management and also making sure that you cut off. So also book your profits regularly and have a proper risk management on the downside. So I think we also
Most of the questions we have answered, Saket, like,
exactly,
whatever
exactly.
we
So
have
that,
discussing over here. So it's a
yeah,
lot of one of the interesting questions that I saw over here was, any books related to trading psychology. Definitely, there are certain really nice books. One is Trading in the Zone, and one more is Market Wizard. I think Market Wizard is something that Optionables are reading in the group, if I'm not
right.
wrong.
So we have that currently being read in the group.
So that is a very good book. So you can read these books to understand more about trading psychology.
Right. So next, we have one more question from Prashant sir, so which we hadn't addressed. So some people do lot of over trading. So they enter a position, exit out of it, again immediately do one more trade, again cut that, again take one more trade. So the thing is, they end up doing so much trading that. Do you think that it's more like a gamble and they're addicted to it, or because they end up losing most of their money in brokerage and taxes rather than making money because they continuously keep trading, they can't stop from trading, they exit out of the position, they immediately enter a new position. So do you associate this with sort of an addiction where people
No.
are addicted to this?
No, so there is a very wrong notion about mental health. Firstly, just because we're doing something repeatedly, that doesn't mean that that is an addiction. All right, so there is a lot of different diagnostic criteria for the same. So don't,
Okay.
it's not an addiction as such. So you keep entering the market because you have in hope that this time I will make profit. This time I
Okay.
will make profit. This time I will make profit. So this particular notion is running in your head, which is making you enter the market repeatedly. So like we
Right.
discussed, it's better to always take a small step back. Instead of having so many trades, why don't you draft a plan which has that one particular execution of the trade so that you get the profits that you want? And instead of entering in multiple trades, one trade gives you that same profit.
Right.
So it's all
That's
about having the right plan and
that's
not
actually
having multiple plans.
That's actually a pretty good advice. So we have Mayban sir who is asking about how do we control fear in trading. I think again we have touched upon it. So having right position size and also making sure that you don't invest yourself emotionally. For that, it's about making sure that you don't lose more than what you can handle, so that you don't become emotionally involved. So most of the questions what we are getting here is something which we have already discussed. But final question what I'll be taking is from Lasley Anthony. So how do we improve our discipline? So if you want to talk from a personal level, so not just trading discipline, a personal discipline. So I want to stick to my routine. So let's say I want to improve my personal discipline. How do I do that? So is there any tips or tricks for me to improve my personal?
Yes, so to maintain your discipline, so what you can do is do the things that works for you repeatedly, right? So like you have a habit setting called as 21 days. So in 21 days, if you follow something, that becomes a habit for you, right? So make sure that you follow something in that particular manner so that it becomes like a discipline. When you're
Right.
trading in the
Okay.
market, it's for some people it can be meditative as well to trade in the market, right? And they have a discipline set, they follow their plans, they stick to the plans because that is what gets them better returns, or that's what has kept them from becoming too afraid or losing their sanity, right? So stick to the plans, and that discipline, it definitely takes some time to come. It will take some time, but definitely you will reach it over there.
So that's a great advice, to be honest. And so maybe even I should actually follow this 21-day rule and see, because there are many things which I want to personally adapt in my life. So
Definitely.
maybe I will definitely try following this. And
Yes.
since we are coming to the end of this session, so is there okay, I think there is some sort of disconnection which has happened. So I'll just try to figure out what exactly has happened. So since we have already come to the end of this session, so I'll just try to see what exactly happened meanwhile. Okay.
Sorry, disconnected. So sorry.
Yeah,
Yes.
not an issue. Not an issue at all. So, since we have already come to the end of the session, so do you have any final closing thoughts? So, about psychology and about trading in general. So, what are the closing comments which you would like to give?
I would just, say that, people tend to think that, trading is something that is very scary, or, they have this bad perception. Also, I would say that you might lose a lot of money, or it's a very stressful thing. Even in the questions that you can see over here, everybody is asking about fear or that they're going to lose money, things like that. So that is not the thing. So that is only, like some people who have had a lot of losses, or they're not sticking to the plan, or they're getting influenced by others. So that is what is making them say things like that. So trading is actually very nice field. So you follow it by learning a lot, focusing on the history, and maintaining that discipline that you set. No matter what happens, you maintain that discipline and follow your trading book. Keep track of whatever performance that is happening, and be calm when you're dealing with things, and be adaptable. So suppose the market is changing, don't fret too much over it. You know that market is unpredictable. This is not a news for
Right.
you, you already know that. right? So you know it's going to change. So always try to have better risk management and know what is your risk appetite so that you can trade in a much better manner. And yes,
And that
meditation can help. Yes.
Yeah, that's great, Vandana. And I would like to thank you for giving so much time and coming on the session live and spending so much time for educating us with how psychology actually works in trading. And also for the audience, so she is an full-time entrepreneur, and she's also founder of a company named Psychoflakes, which works in mental health area. So you can definitely go check that out as well. So the link is in the description below. And finally, I hope all of you had a great session and you got to learn a lot about trading, as well as how a trader's mind works and what is the psychology behind that. So with that, we also come to the end of the session, and I really hope you guys had a great time joining us live. So thank you so much for joining us live, and I will be again coming out with more videos soon on the YouTube channel. Thank you so much, guys.
Thank you so much,
Thank,
everybody. Thank you, Saket.
yeah,
Bye
thank
bye.
you, Vandana. Bye. Thank you.